Hi everyone, good evening. Hope everyone is doing great. Let me share my screen, then we can start today's presentation. Hold on a minute. So, quick recap. I wanted to give you the quick recap. Then we can start today's presentation. Okay. So, what we learned in the previous session is we discussed about uh, the chart movement, the candlesticks movement. Basically, we talked about the movement of price, where how the price is moving, right? And who is moving, who is stopping, and who is breaking the price. So that sort of things we have discussed. Especially we talked about the three different things. I mean, we should ask this three question whenever we open the chart. Uh, where is market stopped? What is broken? What is my trading area? This is the three basic question we need to ask ourselves before we trade, before we start our trading every day. Even though you are an experienced trader, you need to ask this three questions: where market stopped, what is broken, and what is my trading area. This three question we need to answer. Especially we talked about the break of structure, the structural stopping point, and break of structural point, and break of structures. So I told you guys that we are not deciding the price of any product. We are not deciding the price. This is very 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 uh, practical thing, common sense. Even if I buy one pencil, this is, I think, 1 rupee or 2 rupee pencil. Even that pencil cost is that price is, I'm not deciding. Okay, somebody is producing and somebody fixing the price, somebody is labeling it, somebody is marketing with this pencil with a particular price. So I'm not deciding the price. I'm not increasing the price of the product. I'm not decreasing the price of the product, and I'm not breaking the price of the product. Right. So this is applicable for every single product, including financial product like stocks, commodity, crypto, and forex. So the big players, big associations, the group of the billionaires, or I can say millionaires, they are the one who always trade in the market. They are the one, their capital is always there in the market, and they are the one who manage the flow of the market, in and out flows and everything. They are on the managing. So their money is, and their decision is important than ours. So they are the one increasing the price, they are the one decreasing the price, they are the one stopping the price, they are the one moving the price, and they are the one breaking the price. So according to that, we will be trading the market. So our agenda here is very simple. Any market you take, any time frame you take, and stick with that time frame. Don't change the time frame. Stick with, if you are choosing 1 hour, stick with the 1 hour. First things first, you need to look for the stopping point. Now you can see from here, market was buying and stopped here, and market was selling, stopped here, market buying, stopped here, selling, stopped, buying, stopped, selling, stopped, buying, stopped, selling, buying, selling, buying, selling, buying, selling, buying, selling. So all those stopping points are important points, because we are not creating this, we are not stopping the price, we are not moving the price. We cannot do it. We cannot stop the price here, we cannot stop here, we cannot stop here, we cannot stop here. We cannot do it. Why we cannot do it? Because we don't have money. Simple answer. If you have money, you can do anything, right? You can buy anything. You can buy even the government officials, right? If you have money. So the thing here, no, since they have crores and crores of money, So they are the one actually can able to stop the price, not you, not me. Okay, so they are the one stopping the price, and later they are the one is breaking also. Later they are the one is breaking also. So whenever they break, whenever the stopping point that the structure is broken, then market, um, most of the time it's try to go to that direction. If it is broken upside, it will go upside. If it is broken downside, it will go downside. So that is how market algorithm is designed, and that's how the market movement also designed. Okay, so our agenda here is first, what is where it is stopped, what is broken, and what is our trading area. For example, right now you can see here, from here market gone above, stopped, pushed down, stopped, gone above, stopped, pushed down, and kind of stopped, not exactly stopped but kind of stopped. So stopping points, what is broken? Downside broken, downside broken. Okay, so then I'm going to sell. If upside broken, I'm going to buy. Okay, now I'm decided I'm going to sell because it's downside broken, because price is going cheaper, 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 cheaper. So when price go cheaper, the demand goes down. When demand goes down, the people, those who are buying, they will stop buying. They will start to sell. Okay, so broken downside, I'm going to sell. So where I'm going to sell? From this, within this what do you call it? Within this particular stopping points, within this area. Within this area is I'm going to sell. That is called my trading area. We'll talk about this detailed manner today. From the trading area, we'll be looking for sell. Although the trading area is not much important, you don't need to mark trading area, but understand, whenever a structure is broken like this, going up, going down, and going up, whenever you see this break from here to here, the break happened with this movement. With this movement is broken this, right? From here to here, there is a movement happened, right? That movement is responsible for the break. Okay, so that is my trading area. Within this, I'm looking for buy. All right, so that's the reason we are marking trading area. Trading area, you don't need to mark, but you can have it in your mind. Okay, by the way, we can restrict ourselves within this area only. Suppose now you are going to trade the market. You don't need to see here, 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 here. Just see what is broken. This is broken. So what is the trading area from here to here? It's my trading area. So I am only going to focus only this area. So by the way, I'm getting some idea. Okay, from this area, I'm going to sell. So I'm not going to get confused with this one or this one or this one or some resistance here, some support here. I don't care. My focus is here only. So to get the focus, you can mark this trading area. So it is not much important, but you can mark. Okay, this is what we learned. Also, I have talked about the breakout structure. So breakout structure is nothing but candle wick should broken by candle body. This can be immediate candle, or it can be a third or fourth candle also. So if you see here, the wick of the candle is broken by the body of the candle. 1, 2, 3, fourth candle is broken. So it can be fourth candle, fifth candle, sixth candle, any candle. It can be immediate candle also, something like this also. This is also breakout structure. First candle is broken by second candle, breakout structure. But here first candle is broken by fourth candle. This is also breakout structure. So everything is breakout structure. Wherever you see, that will be breakout structure. So breakout structure, some of you guys are marked and shared in the group. I have seen that also. You need to understand that every wick broken by the candle body is a breakout structure. Okay, every candle broken by the next candle it's also breakout structure. But we are not going to mark everything, because if you mark everything now like this, breakout structure, 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 so that will create more confusions. That's the reason we are looking for the stopping point breakout structure. Stopping point breakout structure mainly. So here mainly market stopped. Here also stopped. From here to here it is stopped, right? So if it is broken, then that's fine. That's good. That's great. That is the important for finding the direction. So similarly here you can see from here to here market went down, stopped here, gone above, stopped here, went down and broke this. Also it broke this previous one. So this main break we are considering as a break of structure. Not everything. We are not going to consider every single candle. That create confusions. But the major stopping points, whenever the major stopping points is broken, that is called, we are calling as a break of structure. So for example, here it's a break of structure. Here it's a break of structure. Here it's a break of structure. Okay, if this is broken, that is also break of structure. This is broken, that is break of structure. Break of structure. If candle comes down, break of structure. Candle goes up, break of structure. Okay, but technically speaking, every candle break is a break of structure. There is no doubt about that. But we are specifically looking for the major structure break. Okay, or in other words, we are looking for swing break. Swing break. I'm introducing the new word swing. This is, I think you already know in the masterclass. In the masterclass, we discussed about the swing points, right? So swing point breaks are really powerful than ordinary break of structure. What's the difference between ordinary break of structure and swing point break of structure? Ordinary break of structure, a candle will be like this, first candle and second candle, right? This is very common. And third candle will be broken by the, second candle will be broken by the third candle. This is very easily happens at any time frame. You can see here, break, 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 break. And even if I can consider this one break. Okay, this is very common. This is not going to give you an idea in the market. It's not going to give you the direction of the market most of the times, because it is organically, it will be happening. It is like a regular thing. But swing breaks are peculiar. Swing breaks are very what do you call it? Important one. So what is swing breaks? As we already learned in the master class, we learned in masterclass. I have showed you the 3-finger strategy, right? 3-finger strategy. Candle 1, candle 2, candle 3. This is called a swing point. Swing high and swing low. Swing low will be like this. Swing high will be like this. Three fingers, middle 3 fingers, and swing low will be reversed middle 3 fingers. This is very important. This is also smart money level. Most of the times your stopping point will be swing point. Simple language. In previous session we talked about stopping point, structural point, structure break, and everything we discussed, right? Most of the times the stopping point will be a swing point. Just look at here. So what is this? This is swing point, like this. What is this? This is swing point, like this. This is stopping point, stopping point. This is also stopping point. What is this? This is swing point, like this. And if you come above here, this is stopping point, right? What is that? That is swing point. This is swing point, 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 swing point. So red candles are coming, and suddenly green candle is popping up, right? You can see red, green is popping up. What is this point? 1, 2, 3, swing point, like this. Okay, like this. So swing points are the stopping points. Generally, swing points are the stopping points. Swing points are the structural points. Swing breaks we are considering as a break of structure for direction. Swing breaks we are considering as a break of structure for finding the direction of the market. So once again, I'll take a 1-minute chart. I'll show you this. Why swing points are very powerful. Just see this 1 minute chart. This is a 1 minute chart of Euro USD. Just see here from the top, from here. You can see the swing point here. 1, 2, 3, something like that. Okay, afterwards, market went down. You can see the swing point here. Market gone above. You can see the swing point here. Market went down. Swing point here, gone above. Swing point here, went down. Swing point here, gone above. Swing point here, went down. Swing point, swing point, swing point, swing point. If you see, everything is swing point. Market first, let's say market is going up, 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 up. Suddenly it will create swing point here, like this. After creation of swing point, market will go down, go down, go down, go down, go down. Then it may create a swing low here. Then market will go up, go up. Let me do this properly. Um let's say market is buying, buying. It will be going like that, going like that, going like that, and suddenly it will create a swing point like this. Swing point. Then market will go down, go down, go down, and it will create a swing point here. Okay, then it will go up, go up, go up. It will break this swing, break of structure. Then after the break, it will create a swing point like this. Then it will come down, come down, come down, and it will create a swing point once again. After the swing point, market again will go up, go up, go up, go up, break this swing, then create a swing point, then it will go down, something like that. So market always create swing points, swing points, swing points, swing points. That swing points are your stopping point. If you don't know how to find the mark the stopping point, close your eyes, take a swing, swing highs and swing lows. Swing points are your stopping points. Okay, so swing levels, after creation of swing level, market will either go up or go down. So when market is going up, going up, going up, suddenly if you see swing point, market can reverse little bit. Market can reverse little bit. Then it will again create a swing low and go up. Okay, like this, going up, going up, going up. After creation of swing point, it will go down. After creation of swing point, it will go up. Swing point, go down. Swing point, go up. Swing point, go down. This is the repeating nature of the market. If you take any chart, any market, this is the thing will be happening. Take a different charts, take a gold. Just observe this gold chart, and you can see here there's a red candles here, continuous red candle, 1, 2, 3, 4, 5, 6, 7, 8. Sell movement, right? Where exactly it is started? If you see before this movement, you can see the swing point here. 1, 2, 3 candle. Let me zoom in. It's a 1 minute chart. Okay, it's a 1 minute chart. Just see here. Let's change the color. 1, 2, 3. Stopped, stopped, stopped. Swing point, right? Swing point. After the swing point, what happened? 1, 2, 3, 4, 5. Almost 1, 2, 3, 4, 5, 6, 7, 8, 9, 9. Almost 10 candles. 10 candles are selling candle. Okay, just see here. 1, 2, 3. This is a very big one, but this is also swing point. After that, you got a sell movement. You can see here. 1, 2, 3 swing point. After that, you got a selling candles. Okay, just observe this. After every swing, market will either reverse, either go up or go down. See here, swing here in the bottom. After that, market a little bit reversed, and from there it will little bit gone down. So swing point, market gone above, swing point, market gone above, swing point, market went down, swing point, market gone above, swing point, market went down, swing point, market gone above, swing point, market went down, swing point, market gone above, swing point, market went down a little bit. So market always creates swing points. Market always react from the swing point. Market always um break the swing points also. Whenever swing points are broken, market will go to that direction. If swing high is broken, it will go up. If swing low is broken, it will go down. The same thing, whatever you learned yesterday, stopping point, right? That's a layman approach. Stopping, where it is stopped, what is broken. That is layman approach. For understanding per se, I told you guys. Okay, today, uh, where it is stopped, it market always stop at swing point. After creation of swing point, market will be stopping. See here, selling, 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 selling. What happened? Swing point created. The sell movement stopped. Sell movement stopped. Then buy movement started. Buying, 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 buying. What happened? Swing point created. Buy movement stopped. Then again selling, 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 selling. Swing point created. Not a perfect one. Big swing point. That's okay. Swing point created. Sell movement stopped. Then buying, 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 buying. Swing point created here. Buy movement stopped. Sell started. Swing point created. Buy started. Swing point created. Sell started. Swing point created. Buy started. Swing point created. Sell started. Swing point created. Buy started. Swing point created. Sell started. Swing point created. Buy started. Swing point created. Sell started. Swing point created. Buy started. Swing point created. Sell started. Okay, so stopping point is equal to swing point. Structural point is equal to swing point. So we are looking for swing break. Whenever swing break, that is break of structure. Okay, this is just an extended, what do you call it? Extension of the previous session. Uh, if you are not comfortable with this, you can say stopping point. If you don't want to call swing point, you can say stopping point. But in my opinion, what is market structure? Market structure equal to market structure is equal to stopping point, and that is also equal to swing point. Swing points. What is swing points? Swing points are swing highs and swing lows. What is swing highs and swing low? How it look like? Swing highs look like this. Swing highs will be looking like this. Candle 1, any color, okay? Don't worry about the color. Candle 2, candle 3. This is swing highs. It can have wick, it may not have the wick also. This is swing highs. What is swing low? Just opposite. Candle 1, candle 2, candle 3. Okay, this is, don't worry about the color, don't worry about the size. Color and size doesn't really matter, okay? This is swing highs and this is swing lows. Okay, so what is swing highs and swing lows? Simple language, stopping point. Okay, whatever you learned yesterday, that is previous session, same thing, nothing. Okay, just today we are giving the name. Okay, you can remember the name, you can forget the name, that is your choice. But swing highs and swing lows are the very basic stuff. Try to memorize this. Okay, so market structure equal to stopping point equal to swing point. Both are same, everything is same. Okay, so if you want to find the direction of the market, look for swing breaks. Okay, so what I'm trying to say here is, to find the direction of the market, look for Look for swing point break. Okay, swing point break. So in other words, stopping point break. Stopping point break or structure break. Okay, both are same. Structure break. So just a word, whatever word you are comfortable, you can use it. Okay, I won't say that this is correct word, this is wrong word. No, whatever you are comfortable, you can use that. Okay, same thing. Whatever you learned in the last session, this is just an extended thing of that, right? Because very recently I have developed the strategy based on swing point once again. So it is important to incorporate that strategy in this bootcamp. So that's the reason I'm giving importance to it. Earlier, I don't give much importance to the swing points. I mean, till masterclass, we learn about the swing points. But in real trading, we much. I mean, we use swing points, but not much importance to this. But now I have developed some strategy which is working really well, especially for a scalping and uh, for impatient traders they can use that strategy. So that's the reason I'm incorporating this in this bootcamp. This is not a part of our curriculum. Generally it's not part of our curriculum, but we are including that now. Let me share this with you guys, then we will jump into the another important topic of today, that is I won't call this as a supply and demand, but I will call this as a kind of supply and demand based on strategy, but not exactly, because supply and demand, it's a very old concept. It's a backbone of any economy, any market, any strategy. It's a backbone. There is no doubt about that. But I want to give you the different perspective of the supply and demand today. Okay, I won't give you the traditional perspective. I'll be giving the different perspective, logical way of approaching the supply and demand. Now we need to understand one thing. In market, there are three different type of movements will be there. Three different type of movements, or I can say dominations. Three different dominations. Now look at here. This is the 1 minute chart of gold. You can see here, from here to here. From here to here, you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Each candle 1 minute. Okay. For the last 12 minutes, who is dominating this market? Buyers or sellers? For the last 12 minutes, it's clearly green candle. So buyers are dominating this market, right? Now you may say, sir, 12 minutes. How are you saying? Based on 12 minutes, you cannot say it's dominated by the buyers. But understand one thing, understand the scale of this market. This is an international market, right? All around the world, people are trading. So which is very, very huge, sensitive market, huge market. So in this huge market, for the last 12 minutes, buyers are dominating, right? Very clearly we can see that. Buying, buyers are dominating. No doubt about that. And previously, before that 12 minutes, there were sellers dominating here. Sellers selling. Okay, from here to here. So sellers also dominated here. Then now buyers are dominating here. Means buyers are buying. So they are involved more. So in market, both sometimes buyers will be dominating, sometimes sellers will be dominating, sometimes both people will be dominating, both equally dominating. This is the three different scenario of the market. If you see continuous green candle, green, right? Green, continuous green means obviously there is no doubt buyers are dominating. If you see continuous red candle, sellers are dominating. Okay. Now, I would say I want to give you some theoretical aspect. For example, continuous green candle or big green candle is equal to buyers domination. Domination. Buyers are dominating. Continuous red candle or big red candle is equal to sellers domination. Okay, so what is big red candle, big green candle? See this one? Can you see this candle size from here to here? See these candles? Big candles, right? It's not a big, but this is a definitely big candle. Big green candle, big red candle. Okay, even in a 1 minute time frame. So this, what is continuous? Continuous means this is continuous. Red, right? Continuous. Continuously red candles. What is big candles? Big candles. Do we see any more example? See this one? This is a big candle. Definitely a big candle. Candle size is big, really big. Candle size is really big. Candle size is big. Okay, big candles, continuous candles, buyers domination, sellers dominations. Okay, it depends upon the color. Depends upon the color. So where else we have? Yeah, see this one. This is definitely a best example for the big candle. Big candle means big buy. It's like a wholesale buy. One guy buy everything, right? One guy go to the shop, buy everything. Or many people go to the shop, buy one thing. It can be anything, right? I am the guy. So for example, in a supermarket, 1,000 water bottles are there. Okay, this kind of water bottle, 1,000 water bottles are there. I'm going into the supermarket, I am buying entire 1,000. That is a big purchase, right? Or 1,000 people go to the supermarket, each buy one water bottle. That is also big purchase. Okay, so when that happens, this kind of big candles will be created. In market also that happens. In market, all over the world, people looking for buy gold. Everybody buy gold. This kind of big candles will be created. Or one person, maybe the 1% or 2%, they pour some crores and crores of money. They can also create this kind of candle. Either collectively people can create this kind of candle, or one guy can able to create this kind of big candles. So we need to understand that big green candles, big red candles, continuous green candle, continuous red candles, which we call buyer's domination or seller's domination. And most of the time, in this candles, smart money is involved. The big player is involved. Okay, big player involved in this kind of candles, in this kind of continuous red, green candles, they involved. Big candle, they involved. Their money is involved. That is also you need to understand. Okay, so this is two type of dominations. Either buyer will dominate or seller will dominate. And also you need to understand continuous dominate and domination spelling is wrong. Okay, domination. Yeah. Okay. Also you need to understand continuous candles slash big candles means smart money involved. Simple logic again, guys. Simple logic. Only they can buy more quantity, right? Only they can buy 10,000 shares at a time. Am I right? It's very practical, right? You cannot buy one lot of bank nifty, nifty 50. If you want to buy one futures lot of nifty 50, you need 1.5 lakh rupees. Right? Then why bank nifty suddenly create a big movement, big candles? Why? Because they involved. They are buying more quantities because they have money. They can buy more quantities at a time. Okay, so when you see continuous green, continuous red, you need to understand that smart money could have involved. And also you need to understand that is called buyer's domination or seller's domination. Now we need to understand one basic stuff. Trading means buyers and sellers. If you are buying, somebody need to sell. If you are selling, somebody need to buy. Okay, only then it is called trading. If I am buying particular stock or particular currency or whatever, let's say I am buying particular thing, okay, somebody should sell that, only then I can buy. If I am selling something, somebody should buy, only then that sell will complete. Okay, if I go to the supermarket, I can buy, or I can go to the stationery, I can buy this pencil, but for that I have to go to the stationery. I need to give some 5 rupees, only then they will give this pencil. Right? I cannot simply sit in my home and I cannot throw my money to the sky. I cannot expect the pencil to come to my home. Even if you are ordering the pencil in the online, you need to pay the money, right? Only then the pencil will come to the home. You need to choose the seller, and from the seller you need to buy, right? So you have to go to the shop, pay the money, buy the pencil. And shopkeeper should sell also, only then you can buy. If shopkeeper don't have the pencil, you cannot buy the pencil. So what I'm trying to say here is, every buy should have sell, every sell should have buy. Okay, this is the very important, very basic concept, but very important concept also. Every buy should have a sell, every sell should have a buy, or I can say every buyer should have a seller, every seller should have a buyer. This is what we are calling as trading. Trading means buying and selling, buyers and sellers. Okay, only then the trade is completed. Okay, but you need to understand, sometimes in market only one person will be dominating. Sometimes, for example, here, from here to here, everybody buying. So only buyers are there here. Only buyers are there. So from where they are buying? From where they are buying? I hope you can able to get this point. Everybody buying. Who is selling? Who is selling to them? Who is selling to them? Everybody selling here, selling. Let's say here, selling. So only one person, only sellers are dominating here, right? So here only buyers are dominating, here only sellers are dominating. So this is not a healthy price action. This is not a healthy trading. I'm buying, you are buying, entire world is buying. Nobody's selling. Nobody's ready to sell. Everybody buying. Then somebody need to sell, right? Only then the buy will be, only then buy will be completed. It is like I'm ordering some product in Amazon. Let's say you're taking your mobile phone, you paid the money, you order that particular product, but product is not reached to you. Product will be reaching by next week only. So until then the trade is not completed, right? The purchase is not completed. You paid the money, you order the product in Amazon or Flipkart, but the product is not reached to your home immediately. It will be reaching by day after tomorrow or maybe next week. Until then, the sale is not completed, right? If you're ordering food in Zomato or Swiggy, you're ordering everything, you paid money, food will be coming to your home after 1 hour or after half an hour. Until then, the trade is not completed. You just executed the order, but product is not received. Okay, something like that. This is the situation like here. So when you see green, 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 whole world is buying. I am buying, you are buying, everybody is buying. Who is selling? Who is selling to me? Because I am buying, who is selling to me? Okay, we'll discuss that in the later, not today. Maybe in the next session we'll be discuss who is selling to me. Okay, but you need to understand this is not a healthy price action. This is not a healthy trade. Okay, everybody buy, 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 buy. Now you can see everybody selling here, selling, 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 selling. I'm selling. Nobody ready to buy. Nobody's buying. Okay, I'm buying. Everybody buying. Whole world is buying. Then I don't have a seller. Okay, this is kind of intriguing, but you need to understand the. If you understand the logic, no, you will get the point. Next session, I'll discuss this once again. You will get an idea. Okay, now what you need to understand here is when everybody buy, right? When everybody buy, price increases. When everybody sell, price decreases. Okay, price increase or price decrease. As a smart money trader, or you need to think as a smart money. If you are a business person, if you are doing a business, okay, you are running a factory. Factory need raw material. You purchase raw material and you produce some product and you sell the product into the market. You make money. This is your business. So in market you are going to purchase the raw material. So raw material price, if it is keep on hiking, increasing, decreasing, increasing, decreasing, increasing, decreasing, then you cannot procure that raw material at particular price. So let's say a raw material price is from 100 rupee, it's going suddenly going 500 rupees. From there it is again going to 200 rupees. Okay, again going to 600 rupees. Now you want to purchase the product, raw material. You need to buy the raw material, only then you will process the raw material, you will make a finished product and you will be selling that into the market. So to fix the selling price, you need to know the buying price of the raw material. You cannot, today you can buy raw material for 500 rupees, tomorrow you can buy 200 rupees. Then you cannot fix the price of that particular product. That will be difficult, right? So smart money also having the same problem. Smart money, this kind of market, no, market always fluctuate, buy, sell, sell, buy, sell, buy, sell, price increase, price decrease, price increase, price decrease, price increase, price decrease. Now as a smart money, I want to buy at optimum price. What do you mean by optimum price? I want to buy not at a costlier price or not at a cheaper price. I cannot buy cheaper price because market is fluctuating. Price is going up, going down, going up, going down. I cannot buy at cheaper price. That is not at all possible. At the same time, I don't want to buy at costlier price also. If I buy at costlier price, that is not going to give me the profit, right? If I'm buying at 1,000 rupees and I'm selling at 1,020 rupees, that is not going to give me a profit. Okay, so as a smart money always think like this. Smart money always buy from the optimum price. Optimum price. What do you mean by optimum price? When green candles are created, price is increasing. When red candles are created, price is decreasing. Okay, this is very common. When you have a continuous green candle, price is changing, increasing. When you have a continuous red candles, Price is decreasing. In this scenario, smart money cannot buy, smart money cannot sell. They will not sell, because market is running very fast, up or down. They cannot do, they cannot buy, they cannot sell. So what they will be looking for is, they'll be looking for optimum price. They want both buyers and sellers equally. They don't want buyers domination, they don't want sellers domination. Sellers domination creates cheaper prices, buyers domination creates costlier prices. But wherever buyers and sellers are equal, in that optimum price will be created. Optimum price will be created. What do you mean by that? Now just look at the charts. Now just see here, selling, right? From here to here, sellers are dominating. Definitely sellers dominating, right? Okay, no doubt about that. From here to here, again sellers dominating. Okay, but what about this area? In this area, who is dominating? Look at here. Sellers are selling, buyers are buying, sellers are selling. Okay, let me do this like this. Sellers are selling. Buyers came in, sellers selling. Okay, from here to here, overall sellers are dominating. No doubt about that. Overall sellers are in stronghold. They are holding. They are the one dominating the market. No doubt about that. But in between, some buyers came in. Some buyers also came in. Right? Some market took some rest over there. Sellers took some rest over there, right? Okay. So that area is called equilibrium price or optimum price. So what do you mean by that? Whenever you see a range market, whenever you see the range market, in range market, prices will be optimum. Prices will be decent or equilibrium. Now, from here to here, sellers dominating. So prices are going down, right? Prices are decreasing. From here to here, sellers domination, prices are decreasing. But in between, there were some buyers involved, right? So they little bit increase the price. Market was falling. Buyers came in, little bit increase, and then sellers domination. So in this area, what is happening? In this area, buyers equal to sellers. Now, this may be look difficult to understand, but let me show you. Let me zoom in. See here. See this area. Okay. Sellers were selling, right? Suddenly there is a buyers came in. Buyers buying. Then sellers selling. Buyers buying. So what happened in this three candle? In this three candle, first sellers were selling. Then buyers came in. Okay, here in this first candle, buyers came in. Then there is a seller came in. Red candle, second candle. Then there is a buyer came in. Green candle. So I want you to see this three candle. These three candle. Market was selling. Selling. Suddenly there is a buyer. Okay. Then buyers were buying. Sellers were selling. Next candle. Then buyers were buying. So what happened here? Buyers buying, sellers selling. So buyers equal to sellers. In this area, can we say like that? Can we say like that? Once again, I'm repeating this. See here, selling, 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 selling. Suddenly, buyers were buying, right? Buyers were buying, sellers were selling. So buyers and sellers kind of equal. The two candles kind of equal. I'm talking about the size of the candle, right? It's kind of look like a rectangle box. It will stuck inside the rectangle box, right? If you put a rectangle box, all these three candles are equal size. First candle like this, second candle like this, third candle like this, right? Somewhat equal. Okay. First candle, buyers buying, green candle, red candle, and again green candle. So buyers buying, sellers selling, buyers buying. So buyers equal to sellers, sellers equal to buyers, right? First candle is a green candle where buyers buying. Second candle is a red candle, sellers selling. Third candle is a green candle, buyers buying. So both three candles are kind of equal, not exactly equal, but somewhat equal, right? Somewhat equal in size. Parallel candles. Okay. So here what happens? Buyers equal to sellers, sellers equal to buyers. That is the situation happening in this three candle. So in this particular area, both buyers and sellers somewhat equal. I'm not telling exactly 100 buyers, 100 sellers. No, I'm not telling like that. Maybe like 100 buyers, some 150 sellers, something like that. Somewhat equal, not exactly, because nobody know how many buyers involved, how many sellers involved. Nobody know that. But what I'm trying to say here is candle sizes are equal. Before that, what was the candle pattern? Before that, candle was going down, coming down, coming down, coming down, coming down, something like that. But after reaching this point, it was going up, going down, like this, going up, going down, going up. Okay, it was like within the box, right? So this is called range market. Range market. Why we are calling this a range market? Because markets either trending or it will be ranging. What do you mean by trending market? Trending market means it will buy or sell. If continuous sell happen, that is trending market. That is called trending market. But if market couldn't able to move, example here, market stuck somewhere like this. See this box? If you put a box here, market is going up, market is going down, going up, going down, going up, going down, going up, going down, going up, and finally gone down. So what is happening here? What is happening here to here? In here to here, going down, going up, going down, going up, going down, going up, going down. So it is clearly telling you that market is downtrend. It's going down. Okay. From here to here, it's clearly a down movement. It's like a 90-degree movement, down movement. From here to here also, it's clearly a down movement. But what about this in between area? In this in between area, it is buying, it is selling, buying, selling, buying, selling, buying, selling. So what is happening here? Up, down, up, down, up, down, up, down. So what happened here? In up movement, buyers are buying. In down movement, sellers are selling. In up movement, buyers are buying. Down movement, sellers are selling. Up movement, buyers are buying. Down movement, sellers are selling. Buyers are buying, sellers are selling, buyers are buying. So buyers equal to sellers, sellers equal to buyers, buyers equal to sellers, sellers equal to buyers, buyers equal to sellers, sellers equal to buyers, buyers equal to sellers, sellers equal to buyers. So in this particular area, everybody is equal. You can call equal or both are dominating. Both guys are dominating. Okay, so in a continuous green candle, in a big green candles, buyers dominating. Continuous red candle, big red candles, sellers domination. But here, green candle, red candle, green candle, red candle, green, red, green, red, green, red, green, red. In this area, both guys are dominating, or both guys are not dominating. Both are fighting each other, or both are dominating each other, or you can say both are equal. Anything you can say, because we don't know what exactly happening, but we know that both are fighting each other, both are trying to dominate. Okay, so when everybody buy, what happens? Price increase. When everybody sell, what happens? Price decrease. But when everybody fight with each other, when they fight with each other, price will not go up or price will not go down. Price will not increase, price will not decrease. In this area, what is happening? Very simple logic apply here. Everybody buying, and everybody started to sell. Everybody buying, selling, buying, selling, buying. So what is happening in this area? Buyers increasing the price, sellers immediately decreasing the price. Buyers increasing the price, seller immediately decreasing the price. Buyers increasing the price, sellers decreasing the price. So buyers increasing, sellers decreasing. Buyers increasing, sellers decreasing. Buyers increasing, sellers decreasing. Buyers increasing. So price will be within this level. It will be like within the range. It will not go above or it will not go down. This is called optimum price. What do you mean by optimum price? Optimum price is nothing but buyable price or sellable price. I want to buy something, guys. I want to buy something. Okay. But in market, prices always fluctuating. So if prices are fixed, no, I can easily buy. But prices are increasing, decreasing, no, I cannot buy. So I'll be looking for the proper opportunity, proper discount, or maybe like uh, a proper season. And that season, I'll be looking for buy at cheaper price or with a decent price. You know, buying at 10 rupee, it is not possible. We cannot buy at 10 rupee. At the same time, we don't want to buy at 100 rupee. 100 rupees is very costly. 10 rupees way cheaper. It is very difficult to get a 10 rupee. But 50 rupee, if I buy 50 rupee, that is not a big, that is not a costlier, that is not a cheaper either. Okay, 50 rupees is somewhat middle. That is called optimum price. That is called decent price to buy, decent price to sell. So, in a nutshell, every range market, is optimum price level. In every range market, both buyers and sellers are equal. They equally present and they equally dominate, and prices will be optimum. So we need to buy from the optimum price. Why? Because smart money always buy from the optimum price. They won't buy from the costlier price. They won't buy at cheaper price. I mean, cheaper price they will be buying, but not all the time. Okay, it is like 50-50. In a 50 middle level, they will be looking for buy. So what you need to do? You need to find the range market. How do we find the range market? Take a chart. Let me give this. Range market slash sideway market. I'll give this like this. Range market is equal to sideway market. That is equal to choppy market. These are some terminologies. Okay, that is equal to what do you call it? Consolidation. That is equal to base. That is equal to distribution. Don't worry about these terminologies, because why I'm giving this terminology, many people in the internet, they use different words, but every word is same. Okay, everything is same here. That's the reason I given equal. Okay, so range market means in range market, in range market, both buyers and sellers are equal, or I can say dominating each other, or I can say fighting each other. Fighting. It's a battle between buyers and sellers. Battle between buyers and sellers is the range market. Okay, range market. I'll tell you. Don't worry. I'll tell you how you can find the range market. So you need to understand in buyers domination. You need to understand in buyers domination. In buyers domination. Here I'm going to add few more words here. In buyers domination. Domination. Price will be increasing. In sellers domination, price will be decreasing. Okay, this is you need to understand. This is very common thing, right? Okay, then in range market, what happens? In range market, prices will be optimum. It is not increasing, it is not decreasing. Means not in neither increasing nor decreasing. Okay, it is like within this, within the particular level, up and down. Okay, optimum means a decent price. Optimum means, in a simple language, for a layman approach, optimum is equal to a decent price, guys. Nothing, decent price to buy or sell. Okay, in a simple language, or you can say equilibrium price. Optimum price or equilibrium price. Equilibrium is an economic terminology. If you're an economic student, you know that equilibrium price. If you studied economics in your colleges, you know that what is equilibrium price. Okay, so this is just a theory part. Now I'll give you the practical application, how you can find the range market. That is important, and how you can take a trade from the range market level. Right, this is, I'll share with you guys. Then we will jump into the charts. We will try to understand the range market logic. Okay, so take a chart, 1 hour, 2 hour, any time frame you take, that is your choice. How to find the range market? What is the criteria to find the range market? Very simple. Very simple. You want to see 3 parallel candles, or I can say series candles. Series or parallel, I don't know what is series. Let me see. I always get this confusions. Series versus parallel. I get this confusion always. I wanted to get an idea. Series means what? Parallel. Parallel is the correct word. This is the parallel, I think. Parallel means this is parallel. You can see here, this is electrical circuit. Parallel. Let imagine this is the candle 1, candle 2, candle 3. Okay. So both are parallel to each other, right? Series means is different. This is not. Parallel candles. Okay, you want to look for the parallel candles. 3 parallel candles. That's it. Nothing more than that. 3 parallel candles. So candle 1, candle 2, candle 3. Something like this. It can be any color, and it can have a wick. It may not have a wick. That doesn't really matter. Any color, any combination of colors. Green, red, green, red, green, red. red, red, green, 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 red, whatever. Any combination of colors. Don't worry about the colors. You want to see something like this. If you see 3 candle like this, that is a range market. That's a range market. 3 candle like this. Look at here. Can you see the 3 candle here? So 1, 2, 3. First candle, second candle, third candle. All these 3 candle coming in inside this box. I mean 1, 2, 3, right? 3 candle, not exactly parallel, but I can say that candle 1 like this, candle 2 like this, candle 3 like this. Okay, that's also okay. That is also okay. You want to see everything comes within a box. Okay, so within this box, 1, 2, 3 candle coming, and 4, 5 candle also there. That's also very good. Okay, but minimum 3 candle, maximum can be any combinations. Maximum it can be 4 candle, 5 candle, 6 candle, but minimum you want to see 3 candle. Now this is the range market. Range market means optimum price level. That is your optimum price level. Okay, that is your buying level or that is your selling level. Depends upon the trend. We need to find that 3 minimum candles. So see here, 1, 2, 3 coming within the box. Within the first candle, this is the first candle like this. Second candle is like this. Third candle maybe like this. So everything comes inside this box, inside this candle. 1, 2, 3. Okay, or it can be like this also. 1, 2, 3, or it can be 1, 2, 3, 4. This is also range market. Okay, so any combinations, or sometimes it will be like this: 1, 2, 3, 4. Range market. Okay, the idea is it should be parallel. It should not be like vertical. This is vertical, right? From here to here, it's a vertical, right? Vertical, vertical. But this is horizontal, right? Horizontal. So it should be parallel, horizontal. But this is vertical. This movement is vertical. This movement is vertical. This movement is vertical. But what about this? Horizontal, parallel. Okay, you just want to see the parallel candles. 3 parallel candle at least. If you see 3 parallel candles, that is your, what do you call, range market. That is your optimum price level. And market, most of the times market will respect the range level. Just look at here. Just look at this range level. Candle 1, candle 2, candle 3, candle 4 also. Everything is within this box. Within this box, right? And if you see here, this box, market reacted from this box. Market reached that box. From there, it was went up. 1 hour up movement happened from that box. Why? Because range markets are optimum price level area. Optimum price level area. Okay, now. So wherever range market is there, you can able to see some reactions from the range market. Most of the times, market will be reacting from the range market. Now, this is not a perfect range market. To be frank, 1, 2, 3. It's a parallel candles, right? Of course, it's a range market, but it's a very big range market. So if you mark this 3 candle like this with a box, okay, and if you extend the box, you can able to see this market reached that range market and it rejected to the upside. And if you see the previous one, you can see the 3 candle here. A 4 candle, you can take a 4 candle also. 1, 2, 3, or a parallel candle. See here. Can you see market reacted from that candle? Market reached that candle and gone above. Okay, you can see this again and again. You can see this. There is a range market here also. This is clearly a range market. We can see. Up, down, up, down. See here, it's a choppy market, to be frank. Up, down, up, down, up, down. Range market. That's why market reacted from those levels. Okay, most of the times market will be reacting from those levels, range levels. It's because of the optimum price. In range market, buyers and sellers are equal. Prices are optimum. Prices are decent to buy, decent to sell. That's the reason reactions are happening. So here, this is also perfect range market, in my opinion. Okay, what happened here? Slight reaction, you can see. Market reached over there, slight reaction, not a big reaction, but slight reaction. Okay, so whenever you see the range markets, market will be reacting from those levels. Now, how do we use this for our trading? You know, in my opinion, in my personal opinion, trading from the range market is, it's a kind of not advisable, to be frank. Why? Because it will be a stop loss will be really big, and also your risk is really big. That is a one thing. Second thing is, if you are going to trade from the range market, you should not trade blindly. You should look for some confirmations. Of course, we'll be learning that in this bootcamp. I'll be teaching you that also, don't worry. So blindly trading from the range market level is not advisable. Based on confirmations, we can trade. Okay, so the main criteria here is the direction of the market. That is really, really important. So let's take a different market, maybe like I wanted to check quickly. Okay, let's take a let's take a AUD USD. All right, now we are in AUD USD chart. So you are looking for buy the market. Let's say if you want to buy the market, first criteria is you need to have a breakoff structure. Breakoff structure is important. So you need to look for the breakoff structure. If breakoff structure telling you to buy, then only you need to buy. If breakoff structure telling you to sell, then you need to look for sell. Okay, you need to be very you need to have a clear understanding on that. So first things first, look for the breakoff structure. Then look for the range market. After the breakoff structure, look for the range market. So let's see here. Do we have a breakoff structure? So if I see here, I have a breakoff structure here, right? So market is selling market, right? I'm going to sell the market. I have decided that. Then I need to look for the range market. So where is the range market? Range market, because I'm going to sell from the top, right? In the top, I need to look for the range market. Do I have a range market here? Yes, of course, I have a very big range market here. Okay, it is like you can see here, selling, 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 buying, selling, buying, selling, buying. No, it is uneven range market. Sometimes your market will be creating like that also. So, but it is definitely not a trending market. This is not a trending market. This is completely ranging market. Or you can focus the very recent candles, recent 4 candles also. So if you see here, okay, this is definitely ranging market. See, let me zoom in. First, buyers are buying, 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 buying. Sellers are came in. Buyers equal to sellers now. Then again, buyers came in. Again, sellers came in. So in this area, definitely buyers kind of equal to seller. Of course, previously also you can see that sellers, buyers, sellers, buyers, sellers, buyers, sellers, buyers, sellers, buyers. So this entire area is a range market. Okay, first look for the breakoff structure. So breakoff structure telling you that market direction is sell. Okay, I saw the breakoff structure here. All right, structure is broken. Structure is broken to the downside. Downside broken. Now I need to look for selling the market from the optimum price level. What is optimum price level? Range market. Where is the range market? This is my range market. Of course, this entire thing is the range market. You can take everything also, or you can mark specific 3 candles also. That is your choice. So you need to wait for the market to come back and touch. When it is come back and touch, you are going to sell. Sell entry, stop loss, and target can be any nearest range market or any nearest swing point. So we have a range market here. So that should be your target. That middle of that range can be your target. Or you can focus the swing point. Now, this is very, very much prototype. Means what? This way you should never trade. But this is how the strategy works. Market, this is how market moves. Market always respect from the range market. There is no doubt about that. But since it's going to respect the range market level, I'm not going to close my eyes, I'm not going to buy, or I'm not going to sell. We should never do that because our money is involved. Here our money is involved. If you are selling here, you are going to risk this much stop loss. That is huge. So never ever blindly trade. Blindly trade. Look for some confirmation, and afterwards only you need to trade. Don't worry about that. In coming days, I'll be teaching you the confirmation strategy. Okay. So once you master that confirmation strategy, you can trade anywhere. After getting the confirmation, you can trade anywhere. Okay. But understand one thing: supply and demand, these levels, these range market levels are powerful. Sometimes you can take a blind trades also. It works also. Okay. It works also, but you need to give more. You need to I mean, risk more. That is the only problem with this method. Okay. So that's the reason I'm telling. Have some patience. In couple of days, maybe in the next day, within 3 days, I'll teach you the true price action. Once you understand the true price action, you can easily trade from anywhere. Okay. But now you need to understand that breakout structure first, range market second. First, find the breakout structure, find the direction, mark the range market. From the range market, you either buy or sell. That is a prototype. Okay, this is a prototype. Remember that. Okay, now we'll look few more examples. Few more examples. We have a range market here also. You can see here. This one is a big range market. This one is also range market. Okay, is it worked here? I'm not sure whether it is worked or not. Let's mark this range market. This is clearly a range market, but ranging upwards. You can see it's a range market, but it is ranging upwards. You can see up, little bit down, up, little bit down, up, down, up. So technically, this is the range portion. This is the range portion, not this one. So if I mark that portion alone, so is it worked? No, it is failed. Okay, but entire range. In this area, this is range. Okay, here also I forgot to see this. Up, down, up. This is also range. Okay, this is also range. Two ranges are there within the same level. Same level. Okay. Now, if I mark this entire thing, somewhat worked. Again, it's little bit stop loss hits, but somewhat worked. Not exactly perfectly worked, but somewhat worked. This is the reason you should never close your eyes, never buy, sell from the range level. Many people use the supply and demand strategies. They buy directly, they sell directly. Don't ever do that. Look for the confirmation, and afterwards you need to trade. Okay. But understand one thing: range market is a optimum price level. In optimum price level, you will definitely get some reaction. The only thing here is we need to wait for that reaction, and we need to get some confirmation, then we need to trade. Okay. But understand the prototype. All right. Now look for the range markets and try to mark the range markets and what happened afterwards. Just see here. There is a range market here. There's a big range market. So what happened afterwards here? Market gone above, came back, gone above. So what happened? This range market, this also kind of big range market, because you cannot mark this exactly like this. Range market, there is a problem with range market is you need to mark the big levels, big zones. So for example, this one, this is a big level. Okay, you can see here market gone here, gone above. Now, what are the things you need to see? Very important, you need to see for the break of structure. So here you can see there is a break of structure happened. BOS happened, and afterwards only you are marking the range. All right, break of structure happened. Market is buy direction. Now I'll mark a range market. I'll wait for the touch. I'll be buying. Okay, that is important. So you need to look for the break of structure followed by the ranging market. That is important. Let's take a different pair. Euro USD, not Euro USD. Euro USD we have seen. Canadian dollar chef. We'll take that. Canadian dollar chef. If you see that, there will be a lot of ranges will be there. You can see currently also, you can see there is a range. It's very, very bad market to trade, bad currency to trade. You can see it's completely range. And you can also see here market is touched here and respected little bit, rejected from that level 2 times. First time it is touched here, 2 hour up movement. Second time it came inside, almost 1 hour up movement. Okay, from the range market. And why? Because range markets are optimum price levels. Sometimes you may not get the range touch. So you can see that this is completely disaster, completely worst range market. You can see. So now how do we approach this? First things first, I got a break of structure, BOS, BOS, sorry, BOS, BOS telling me market direction is sell direction. Okay, I found the BOS. Now I need to mark the range market. I have two range markets. First range market is here, and second range market is very near. You can see here there is a range market here. It's tiny range market. Okay, this is a second range market. So both range markets are touched. This is touched immediately. This is touched after some time, and you can see after touching this, there is a reaction. There is a reaction. Okay, so we should not directly trade. We should look for the confirmation. We should look for the confirmation here. So in a nutshell, guys, I wanted to tell you here, if you already know support, supply and demand strategy, where they will be following some patterns, but we are not going to follow the patterns. We are simply try to find the range market. Wherever range market is there, you are going to find the range market. Just mark the range market wherever it is there. Now this is kind of a very bad range market, so I can take this one and extend like that. You can able to see many times range markets are perfectly works. Many times this is a big range market. So the candle wick is also very big. So you see the range markets. See the range market. This is a very bad range market, to be frank. See those range markets. Sometimes it may not touch. It will take some time. So this is also kind of a very bad price action. It is not yet touched. I think in the future it is touched. Little bit worked and failed. So see the range levels. See the range levels here. This is again a complete disaster. Now it's very. That's why I told you guys, chef pairs are really bad currencies for trading. But you can see the ranges, and from the ranges, market will be reacting. Let's take a different. Check a Euro AUD. Euro AUD. Look for the range market in a different time frames. Also, you can look for. So let's say I have. Let me take a 15-minute chart. Okay, 15-minute chart. Look for the range market. See the range market here. Disaster, right? It is not a. It is not a market to trade. So much glutter here, right? Range market followed by break of structure, or break of structure first, range market second, whatever. So it is a selling market. So you can see market touched 1, 2, 3, 4, 5, 6, almost 1.5 hours down movement. Down movement. Now where is the range market? Next range market is there. Next range market is here. That is your buying point. Why it's a buying point? Because there's a breakout structure here. Breakout structure to the upside. So when market reach, you can look for buy over there. Okay. So even in a lower time frame, it works. But thing here is it's a prototype. It's not a complete strategy. It's a prototype. You can get an idea why many people thinks that market is randomly moving. Market never randomly moves. Okay, market never ever random movement never happens. Every movement is a calculative movement. If market is reacting from somewhere, it is either range market level, it's either swing level, it's either smart money level. See here, it is look like a random down movement, but it is not. It's reactor from the previous range level. Okay, market will never react randomly. It will always react from particular level. Okay, so that's the reason we are trying to understand the range market. Okay, so what you need to look for here is you want to see up movement, kind of down maybe, and up. There is a breakout structure, right? In here you will be having a range. You may have range sometimes like this: up, down, a range, up, breakout structure, range market. That is your optimum price level. Market will come back, touch, and go up. Okay, it can fail also. If it is fails, we will discuss that also in the coming days. We will discuss. Okay, so market always, you should always see the breakout structure first. After the breakout structure, you need to look for the range market. That is important. But sometimes even without breakout structure, range market works. So that is also happening right in recent times. But we should go with the rules, right? GBP USD. Let's take a GBP USD. Now you can see it's a 15 minutes range. Pure disaster here. It's very bad market. Very bad market. Okay, now currently this is your optimum price level. This is your optimum price level. We don't know what will happen. Market can break up or market can break down. So what is the current direction? Current direction, breakout structure. There is a range market here. That is your buying area. Okay, and market now created the breakout structure here. I mean range market here. So it can go up like this. If it is go up like this, it will come back, touch this range and go up. Once again, touch this range and go up. And one important thing I forgot to tell you here is, if you are buying from the range, selling from the range, stop loss will be really big, right? So for example, this is the range market. Range market. How I am saying it's a range market, guys? Once again, I will explain this. Simple logic. The logic here is, you can see buyers are buying. Sellers are came in. Buyers are buying. Sellers are came in. Buyers are buying. Here also sellers are selling. So sellers are selling. Buyers are buying. Sellers are selling. Buyers are buying. Sellers are selling. So within this level, buyers equal to sellers. Okay, that is the logic here. That's why we are calling it a range market. Now, sometimes if you are buying here, let's say you are buying here, buy entry, you are putting stop loss over there. Now this will be a really huge stop loss. I believe so. This stop loss is almost 123 point. It is a decent one, to be frank. But let's say it's a big stop loss. In that situation, my suggestion here is, try to mark middle of the range market. So let's say this is the box, right? What is the middle point of this box? So approximately, let's take this measurement tool. If I draw a box like this, you can see there is a arrow. I mean, there's a cross symbol, and there's an arrow here in the middle, right? That is the middle point. That's a middle point. So I'm going to take a line here. That is my middle point. Okay, this is the middle of the box, exactly middle of the box, right? Most of the time, the middle of the range market works really, really, really well. Most of the times, when market comes down, touch the middle and go up. Touch the middle and go up. The reason is very simple. It's a middle point. Middle point means it's not a costlier, it is not a cheaper, it is a middle. It's a decent, it's an optimum price. So that's the reason market always react from the middle most of the times. If you notice that in the range market, that will happen most of the times. You can see here there is a kind of range market here. So kind of range market here, you can see this range market middle. Can you see that middle is here? Middle market touched the middle and went down. Okay, this happens many times. Many times it happens. From the middle level, market reacts. So similarly, now you can see here there is a range market here. It's a very big range market. Mark full range market. Even if you can take the bottom candle also if you want. So what is the middle price? Middle price will be somewhere here. That's the middle price. Next time the middle price is touched, market will be reacting. This middle line is touched, market will be reacting. So like this, market will come down. Or sometimes it will go down like that. From the middle level, market most of the times it will be reacting. So in my opinion, try to trade from the middle level because that will help you to reduce your stop loss. Okay, but I in my understanding, this is the perfect level and this is the middle level. Okay, so from the middle level you can try to take a trade in the future. Also I wanted to tell you here about the trading area. Let's take GPP JPY. You can see here swing point, market stopped, market fell down, swing point, market stopped, 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 swing point, market stopped. Okay, stopping point, stopping point, stopping point. We have a breakout structure, breakout structure, breakout structure, breakout structure. Market direction is up movement. We have decided that, right? So breakout structure telling us market direction is buy. So there is a one breakout structure you can mark. Multiple also you can mark, but one is enough. Market is buy direction. Where do I buy? I should buy from the range market. Where is the range market? Here. I can see here is the range market. That's a range market. Okay, that's a range market. But originally, the movement started from here, gone above, range little bit, and gone above. Now currently also ranging here. Okay, so originally it is start from here and it is right now here. This is my trading range. Okay, so that is my trading area. So original, I'm because from here only the push up happened. Push up happened from here. From here, push down happened. Sell, 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 buy, sell, buy, sell, and that sell become buy here, right? So from here, the major transition happened. Again, market went down, gone above. Okay, from here only the major up movement happened. Up movement happened till this point. So I would say from here to here, that is my trading area. Trading area. I won't consider the range as a trading area. I will be considering the swing point to swing point. That's my trading area. Now there is a method here I wanted to teach you here. So here we marked the range market. When next time market comes here, you are going to buy either from the half level or from the top level, whatever, based on the confirmation, not blindly. Now you need to understand that there is a breakout structure happened. This is the breakout structure. BOS, and this is my trading area low, or I can say swing low. This is my swing low or trading area low, and this is my trading area high or swing high. Swing high, trading area high. Okay, what do you mean by that? The meaning is structure broken, market created the low, and market gone above, created the range market, and market gone above, stopped here, started to reversing from here. Now, this is my buying point. Because it's a range market, it's optimum price level, that is my buying point. But the thing here is, I would like to also know that whether it's really, whenever you buy something, no, you need to buy at discount to price, because that is the way human brain works. If you want to buy something, you always want to buy at a discount price. If you want to sell something, you always want to sell at costlier price or premium price. Okay, suppose you are buying something, you ask for the discount. Can you give me the discount, because I'm buying this much product from you? Can you please give me the discount? But if you're selling the same, you wanted to sell at costlier price. This is the human psychology. Human always wanted to buy at cheaper price, sell at costlier price. Even so, a smart money also human, right? They were also a group of humans, so they want to also buy at cheaper price, sell at costlier price. But as I told you guys, practically it is not possible to buy at cheap or sell at costlier. But buying and selling at optimum price, it's always possible. From the ranging pace, it's always possible. So now what we are going to do here is, from here to here, price moved up. In between, it created the range here. That is my buying point. But I want to ensure that this is discount price or premium price. I want to know whether this is a discount price or premium price. So for that, what I'm going to do here is, I'm going to find the middle point of this movement. From here to here, I want to find the middle point. How do I find? Very simple, guys. What is the price here? 197. Approximately you take 197 400. Okay, maybe like this. Yeah, 197 400. What is the price? Top price? 195, 198 500. Okay, there's a costlier price, there is a cheaper price. Now I want to find the middle price. Take a calculator. Okay, so add these two numbers, 197.400 approximately, plus 198.500. Okay, I have added two numbers. Now 395.9 it's a number, right? Now I'm going to divide this in by 2. Divided by 2, I'm getting 197.95. That is my middle price. 197.95. 197.95 will be somewhere here. So let's find that. 197.95. So let's take a line, horizontal ray. I'm putting approximately here. Then let's move it. 197.95. Okay, 959. Let's say 950. You can see here 197.95. That is my middle price. That is my middle price, or I can say median price. Median price, or I can say 50%. 50%. Okay, very simple. You are adding two numbers, highs and low, and divided by 2, and that number, it's your middle price. That is the middle point of this this movement. Now, middle price is optimum price. Middle price is always optimum price. 50% is also optimum price because it is not costlier, it is not cheaper. As compared with 197, it is not cheaper. As compared with 198, it is not costlier. It is middle. Okay. Now you need to understand from the middle to bottom, this area. This is called discount level. Discount level. Middle to bottom is discount level. Middle to top is premium level. Premium level. Okay. Very simple logic, guys. If you want to buy something, you should either buy at 50 or below 50. That only then you will get profit, right? If I want to buy something, no, I want to buy at 50 or below 50. 10 rupees to or 1 rupee to 50 rupees. That is the cheapest price. If you above 50, that's a costly price. If I want to buy, I need to buy below 50. Now, do you see the range market below 50? Then this is perfect. The range market is the optimum price level. Range market itself optimum price level. And that is also falls below 50%. So you can confidently buy from this level because it is already in a discount level. It is already there in a discount level. So whenever you buy, you should buy from the discount level, bottom to middle, or at least 50. You can, worst case scenario, when market comes down like this, you can buy from here also, in a worst case scenario. But better option is look for the range market below 50 if you are looking for buy, below middle. From here buying is optimum. That is a perfect way of buying. Okay, suppose market is coming down and it's going up. It's creating the range market here and going up like this. You got a breakup structure and you got a range market, and buying from here is not advisable. Buying from here is not advisable. Why? Because this range market is created at premium level. Premium level is for selling, not buying. So in premium level, in this area, you should look for only sell, not buy. In this area, you should look for buy, not sell. You should not sell at a discount price. You should sell at premium price. You should buy at discount price. Okay. So how do we find the premium discount prices? Very simple. Take a swing low, swing high. So look at here. We have a swing low here. We don't have a proper swing high. Let's say swing high here. Okay. Swing high, swing low. What is the middle price? Middle price somewhere will be here, approximately. Middle price will be somewhere here. That's why market reacting from the middle price. Okay, take a look at here. Let's take let's see. Even you can take this one. You can see here swing point, or I can say down movement started, down movement stopped. Okay, then market gone above and rejected, right? Why it is reversed from here? Why it is fell down from here? If you see here, most of the time that will be a 50% level. So what is the top level? This is the top level, right? What's the bottom level? This is the bottom level. Bottom level. So what's the price? 197.94, 196. Let's take a calculator. Sorry, calculator. So 197 197.094 plus 196.723 divided by 2. So 196.90, 196.90, right? Where it is coming? 196.90, 196.90, somewhere here, 196.90, right? Can you see that? This is the middle price. You can see from the middle price, market reached the middle price. From there, it is rejected. Most of the time, it happens. Sometimes it might go a little bit up, then it will happen. But most of the time, it will be happening. So now this is a selling market. You know that it's a selling market. How you know? Because you got some break of structure in the past. So you got some break here. You did not got proper break here, but of course, it's also kind of break. So you are going to sell. From where you are going to sell? From the middle price. You need to look for the range above the 50. In this area, you are going to sell. In this area, look for the range. You have only range here. Unfortunately, that range is not touched. So market reacted from the middle itself. Sometimes that happens. It may not come to the range also. Okay. So whenever you sell, you should sell from the middle or above the middle. Whenever you buy, you need to buy at middle or below the middle. So if I want to buy, I'll be looking for range market below the middle. If I want to sell, I will be looking for range market above the middle. So how do we find the middle? Swing to swing, swing low to swing high, swing high price, swing low price. Add the two numbers, divided by 2, put the middle number like this. So here you can see this is again a swing, swing high, swing low, right? Swing point or stopping point, whatever. So what is the price here? Take a line here. This is a top price, highest price, swing high, swing low. So 196, 196.972 plus 196.481. Okay, divided by 2. So 196.726. 196.726. Don't need to take exactly. You can take approximately also. 196.72 or 73. 196.73. 196. 7473. Okay, this is the middle price. Can you see that? Swing high, swing low created. Okay, then market. Okay, market already broken this. Okay, then we need to take the bottom one. I'm sorry, I took a wrong one because it's already immediately broken, right? This swing low immediately broken. So I need to take a unbroken. So far it is not unbroken. This is the bottom price. Okay, let me delete this. So it should be like this, guys. It should be like this. So like swing high created, market coming down, coming down, coming down, coming down, swing low is created. Okay, you are taking this price, adding 2 number, divided by 2 number, putting the line like this. Then market will be coming up, touch this and go down. After that only it will be breaking this. Okay, but in this example, it is not, it is immediately broken. So this is the swing high, this is the swing low I have taken. So now let's take a 2 numbers and add the 2 number, get the middle number. So 196.972 plus 196.133 divided by 2. So I get 196.55. 196.55. 196.55 somewhere here. Okay, that is a 196. That is the middle price. You can see here, swing high created, market fell down, swing low created, swing high created, market fell down, and market came back to the middle, little bit above the middle, then market reversed. Okay, a little bit above the middle, market reversed. But exactly where it is reacted? It is reacted from the range market. So I'm going to sell. I'm going to sell. Where I need to sell? I need to sell from the range market, which is above the middle price. This is the middle price. This is the middle price. Above the middle, I have a range market here. So that is my selling point. So I need to wait for that to touch. I need to take a sell entry. Above the middle only, I need to sell. Below the middle, I need to buy. Below the middle, I need to look for the range. Above the middle, I need to look for the range for selling. Right? So if you feel like it is not understood, no, very simple. Again, I'm explaining this once again. If you don't understand this, take any market, any chart, any time frame. Okay, let's take any market, any chart, any time frame. Now you can see here, you have a 4-hour chart of gold, right? So you have a breakout structure here. You are going to buy, right? You're going to buy. Definitely, you're going to buy. Okay. So what is a swing low? What's the trading area? This is my trading area low. This is my trading area high. Okay, trading area low, trading area high. Within this level, I'm going to look for buy. From where I'm going to look for buy? I'm going to look for buy at middle or below the middle. At middle or below the middle. Okay, how do I find the middle? Two numbers. Add two number, get the divided by the two. So what is the two number? 2450.042. That is the highest price. Plus 2371.186. That is the lowest price. Add two number, you got some number, divided by 2. You got 241061. 241061. So where is that number? 241061. 241061. 190. 2410. You don't need to exactly mark. So this is, I think, little bit above. Let's go. 2410 is enough. 2410861. You can see 2410614. I think the same number. You can see 2461, 2410614. The same number. Can you see the reaction? Why market is touched here? Why it is going bullish? Why it is going up? Because middle prices are optimum price. So you need to either look at buy at middle or below middle. So below middle, this is the middle price, this is the top price. Swing high, trading area high, swing low, trading area low, and this is a breakout structure, and trading area low to middle. Okay, swing high, this is the middle price. Middle price or median price. Median is a statistical term. Price, or you can say optimum price, or you can say 50% price. Simple language. 50% price. Okay, both are same. All words are same. Now swing low to middle is called, from swing low to middle price is called discount level. From I can say swing high to middle price is called premium level. So you should look for buy always at discount level. Should spelling. You should look for sell always at premium. Now sometimes market reacts from middle price also. So means you can look for buy or sell from middle price also. Okay, that is what right now happening. You can see right now why market is touched this middle and why it is creating the green candle. Why it is 1 hour, I mean 4 hour, almost 4 hour, it was bullish. Why? Simple logic, it's a middle price. Why this is middle price is powerful? Guys, it's not a rocket science. If you are like, suppose if you approach any fund management service providers, like for example, if you go to the ICICI Bank, ICICI Securities, if you talk, if you just have a conversation with your relationship manager, let's say, sir, I want to invest some 10 lakh rupee, but I don't know about the market. Can you please suggest me which stock I need to buy, which stock I need to sell? Can you please provide me the PMS service? If you ask them, they will give you certain price levels. Sir, you buy at this level, sell at that level. Or they will give you like, uh, sir, if it is goes above this price, you can buy. If it is goes below this, you can sell. Most of the times, that is a middle price. That's a middle price. There's an indicator called VWAP, volume weighted moving average. I think, I don't know the name exactly. VWAP. Most of the fund managers, they use that indicator. I mean, not in the form of indicator, in the form of statistical tool. Okay, so they use the tool. They'll be trading. I mean, based on that. So that is nothing but a middle price. Middle price. Even 200 period moving average, 20 period moving average, and what else? VWAP, volume weighted moving average. So most of the moving average indicators, to be frank, are all based on the price, are all based on the medium price, middle price only, because it's a average is the one thing. um, it's a best the mathematical tools, even for the big players, to execute their positions. So most of the time that happens from the middle level, because middle level is not a cheaper, not a costlier, it's an optimum. If you are a businessman, you will never buy the raw material for a costlier price, and you will never get raw material for a cheaper price also. Cheaper price you will never buy, you cannot buy. Costlier price also you should not buy. So you should always buy the optimum price, middle price. This is applicable for every business. Every business is applicable. That's a logic here. It's working. Okay, so you need to understand, this is premium level, this is discount level. Whenever you buy, look for buy at discount level. This is a discount level. Let me mark that as a red color box, I mean, maybe like a green color box. This is your discount level, this area. And whereas if you are looking for sell, you'll be selling from the premium level. Premium level. Okay, premium level, discount level. Just try to understand this. And better is at 50 or below 50 if you are buying. If below 50, if you see range, that is better. Above 50, if you see range, that is better. From that range you can sell, from that range you can buy. Okay, something like that. So you can note it down this also if you want. I'm sharing this. Now I would like to tell you something. Whatever you learned today so far, this is not much important, to be frank. Whatever we discussed today, it's not much important, because the real strategy we are going to real smart money strategy we are going to learn from the next session onwards. Next session is Thursday, right? Thursday evening we'll be learning the real strategy. But the thing here is, this is kind of a foundation, or this kind of a knowledge you should have, because how the smart money trade, how the big player trade. No, they consider all these things. They don't mark like this. They don't mark optimum price, middle price in the chart, but they use mathematical formulas using the softwares, and based on that they'll be buying, selling. The mathematics and software is going to give them a level to buy, level to sell. So mostly that is a 50% level, middle level. Okay, so from that only we'll be looking for some. Now in this level, in this scenario, what is the best buying level? If you ask me, there's a range market in the bottom. That is my buying level. Range market, I forgot to mark this. Range market. Okay, from that only I'll be looking for buy, but you don't need to wait for that. You can obviously trade from the 50 percentage, or obviously you can wait for the market to come down, and from that also you can trade. Apart from that, lot of levels also there inside. We will discuss that in one by one in the coming days. Okay, so in a nutshell, you need to understand. Let me delete that picture. We'll keep this. Can I delete for everyone? Yeah. In a nutshell, what you need to understand here is, um, let me explain this once again. First things first, you are looking for first step. Step number one. Step number one. Obviously, you are going to look for trend, right? Look for trend. How do I find the trend? Simple. Look for BOS. Okay, break of structure are going to tell me buy direction or sell direction. Now, which break is important? I told you in the beginning, preferably swing break. What do you mean by swing break? Just see here, swing point, market gone above, swing point like this, market gone down, swing point here, market again reversed, gone above, swing point. Okay, now I'm looking for this swing break, swing break, swing break. Obviously, every break is break. Okay, this is also break of structure, this is also break of structure, this is also break of structure, this is also break. Okay, this is also break, no doubt about that. But I want to know the larger perspective. I want to know the larger perspective of the market. So for that, I'll be looking for swing break. So in previous session, I have not talked about the swing break, but I mean it. Whenever I mark stopping point, that is a swing point. Okay, look for the BOS swing break. Okay, swing breaks are going to give you edge in the market. Swing breaks. That is step number one. So once you find the direction, all right, you found the direction. Now step two. Step number two is, so let's say you found the direction. Let's say it's a buy direction. Let's say it's a buy direction. Then you should look for buy at or below the middle price. Middle price. Let's say it's a buy direction. Then you should look for buy at middle or below the middle. That is middle price. That is uh, discount level. Discount level. You should look for a range market below the middle price. Middle price. Okay, because range market is an optimum price. Okay, now what is middle price? What is middle price? Middle price is nothing but uh, your what do you call, from the swing low to swing high, you are taking the numbers and you are divided by adding the two numbers, and you are dividing that total by 2. You'll getting the middle price. Okay, middle price, how it is arrived? Middle price arrived by adding arrived by adding swing low plus swing high divided by 2. Okay, that's a formula. It's very basic formula, right? So you're going to find that. So step number 2 is you should look for what? Range market. Let's do this. Step 2, step 1. Step number 1, you are looking for the trend. Step number 2, you are looking for the range market. Now, why range market? Okay, this point should come in the top. This point should come here. You should look for the range market below the middle price, since it's a buy direction, right? Below the middle price. In range market, both buyers and sellers are equal, so prices are optimum. Again, you can look for buy at middle of range or top of the range. What is top of the range? You are marking entire range, right? Top, from the top portion you can buy, or middle portion you can buy. Again, you are looking for optimum price inside the range also. That is your choice. Depends upon your risk factor. And your entry can be middle of the range, or I can say 50% of the range. That is the easy way to say. 50% slash middle of the range, or 100% slash top of the range. I'll explain what is middle, what is top. Okay, and stop loss should be below the range. So what I'm trying to say here is, let's say you have a range market like this. Let me move this a little bit. Let's say you have a range market. Up, down, up, down, up, down, up, down, up, down. Okay, range market. So this is your range. This is your range top slash 100%. This is your range middle slash, just give me a second, middle slash 50%. 50%. And entry can be entry here or entry here. That is your choice. But I always suggest go with 50 middle. Most of the time that works really well. And stop loss should be below this range at 0%. Stop loss below the range. Okay, this is what I'm trying to say here. Below the range. Right. Now, Now, let me share this, and I want to quickly give you the traditional supply and demand, which you will be learning from the YouTube and all. I honestly don't follow that method, but some people used to ask me that also, sir. Can you please explain what is rally based rally, drop based drop, rally based drop, drop based rally? That is a traditional supply and demand strategy. You can learn from the YouTube or you can learn from any other mentors. But I don't go with that method. Why? Because that is kind of memorizing the patterns. So if I go to the YouTube, search demand and supply strategy. If you put like that, if you click some images, you'll get something like this usually. So generally like this. For example, I think this is the one we can take. You can see here, supply and demand strategy, rally base drop, rally base rally, drop base rally, drop base drop. Most of the people will be try to memorize this pattern. That is not my way. uh, that is not my method. Of course, for some people it may easy for to follow the patterns like this pattern, like for example, up, range, down. Here it is like down, range, up. Here it is like up, range, up, down, range, down. So some people are comfortable with this terminologies, but I'm not. And why? Because we are not here for memorizing the names and patterns. We are here for understanding the logic. You don't need to look for this pattern. Instead, you look for the range followed by break of structure. It can be any break, like maybe like this break, or range followed by break of structure. That's it you want. You just want to see the range and break. Okay. So you can go with this method also if you want, but I, it is like if you go with this method, no, what is the problem? Let me tell you. Children's when they play in the ground, they watch the sky and they see the clouds and they try to imagine some animals in the clouds. If you see the clouds is clouds, but children when they play they see the animal in the clouds. Some people will see the rabbit in the clouds, some people will see the elephant in the clouds, some people will see the, what do you call, hippopotamus in the clouds, stars in the clouds, or whatever. Clouds are moving according to the direction of the air. Wherever air goes, clouds are moving. But you are imagining that, oh, clouds look like a rabbit. Then it is your perception and my perception may not be the same. You can see rabbit, I can see elephant. So I cannot argue with you that, no, that is elephant, that is not a rabbit. And you cannot argue with me that that is rabbit, that is not elephant, right? So when you learn the patterns, this is the problem. When we memorize the patterns, oh, rally base drop, drop base rally. So rally base drop means it will go up, range and break. If you memorize the pattern now, in real market is like a clouds. Real market is a clouds. It's ever create different patterns. So if you memorize the pattern, if you want that pattern to create in the market, or if you assume that market creating that pattern in the chart, then it can be a wrong also sometimes. So don't what do you call, push yourself to find the patterns in the chart. Don't do that. Instead, follow the flow of the market, how market moves. That is, the flow is important. So let's see here. If you take it here, it's look like what some people say, sir, it is look like a rally base rally. So for example, this is up, range up, right? So it is look like the same here, up. It's not a range, but something like that. Not properly, but of course somewhat, right? They will say like, oh, it's a demand zone, so I'm gonna buy here. So they'll mark. It may work. It will work also, because with a different logic. With a different logic, it will work. Okay, but you cannot always find this. You cannot always find this in the chart, because if you see the chart, sometimes it will look like it will create different things. For example, here, just see here how it does look like from here. Let's say from here, going up, range going down, right? So how it look like? Let's go to the demand and supply. It does look like this, the first one. Let me, sorry, up, color, up, range, down, right? This pattern and this picture and this one is kind of same, with the yellow and this black kind of same. So what is that pattern? It's a drop, sorry, rally base drop. Don't get confused, okay? It is like a supply zone. They want to sell from that level. This range market, they want to sell. Okay, that happened. That's the range market. Market touched, sold. Okay, but immediately what happened afterwards? Sold. Then what happened here? Market created the down, range, up. It's look like a what? If I go here like this, okay. So technically, you can buy from this box, the bottom range. So does that happen? Yes, that happens. Market touched, gone up. Then again, what happened? Market creates. Market what? Mod market create up, range, up. Okay, black color. Up, range, up. How it look like? It look like the first pattern. So if you like this, the second one, up, range, up. So if you try to adopt this, but now we are watching in a 4-hour chart. That's why you can able to figure out this. But if you go lower time frame, you'll get a lot of confusions. A lot of confusions will be there. So stick with the simple logic. Stick with the simple logic. What is the logic? Range markets are optimum price level. From the range market, you will be getting the reaction. That's it. That keep it in your mind. Okay. Look for the breakup structure. All right. So here I have a range market. Great. I have a range market, big range market. Okay. Range market is on optimum price level. Okay. I know that. So what happened afterwards? Market went down. What happened here? Sorry, I'm just messing up with the colors. Market create range, went down. It is broke the structure. So down direction. Direction is finished. Down direction. Okay. From where I'm going to sell? I'm going to sell from the optimum price level. What is optimum price level? Range market. So market touched the range market here, fell down. It is simple, right? Instead of, if you go with the traditional way, no, rally base, rally, drop base, drop, rally base, drop base, you will be mugging up. You'll be memorizing the patterns. You'll be trying to find the pattern. So don't do that. Look for the range. Look for the break. Look for the range touch. Take a trade. Okay, like that. Like that, you need to use. So by the way, no, you don't need to memorize these names. You don't need to memorize the patterns. That is not necessary. So how do we find the range? Now that's a question. 3 parallel candles. Candle 1, candle 2, candle 3. 3 parallel candle is more than enough. If you have more candle, that is also good. Any more is also good. But 3 is minimum. Required 3 candles required. You can find that range market. And 50% middle price. So is that important? That plays role. Conceptually, that's play role, but not all the time. But you can, if you want, you can try. So for example, here, this is the range. From here to here, market went down, right? Or you can take this from here also. No issues. You can take from here to here also. Market went down and it broke the structure. Middle price will be, this is the top price, this is the bottom price, middle price somewhere here. Middle price somewhere here, right? Approximately, even if you take middle price will be here. So above the middle price, you have a range market. that is your selling level. So when market go above middle level and it is touch the range market, that is a perfect selling level. You'll be selling from that level. So same is applicable for the buying also. So for example here, market created the range, market gone above, broke the structure. Okay, structure break of structure happened. Now if you see here, there's a proper break. It's happened only here. These highs are broken only here. Okay, that is a proper break. Range breaks also you can take, but sometimes it may not work. So range market is really big here, to be frank. So up, down, up, down, up, down. So kind of very big range market. So you have to take a half level. So like a full candle. Full range is like this. Half range will be somewhere here. Half range is unfortunately it is not touched. Half range is somewhere here. It is not touched unfortunately. But full range is tested. And now you can see here, this is your swing low. This is your swing high. The middle price will be somewhere here. Right? Somewhere here is the middle price. High price, low price, middle price. So market reacted from the middle price. Also touched the range a little bit. And market gone above. Okay, now the third scenario, if you see, you have a range market here. And this is a low, this is the high. And somewhere middle is this. This is the middle. So market reached the middle and reacted. For this, there are various reasons also there. When we discuss the advanced things, no, I will cover everything. Why market is reacted from the middle, why it is not came here, what is the reason. So everything we will discuss in coming sessions. But as of now, you try to understand that patterns not going to help you. But if you really want to follow the patterns, I suggest maybe you can go through the internet. But this is the major patterns: up, down, up, range, up, down, range, down, up, range, down, down, range, up. Okay, so here, from here to here, buyers dominating, right? Buyers are buying. So this is demand zone, buying zone. From here to here, sellers dominating. So this is a supply zone, selling zone. Okay, now let me tell you, let me mark properly so that you can get idea. So what is this? Strong up movement, buyer domination. Buyers and sellers are equal at the range market, and buyers domination. So this zone is called demand zone or buying zone. Demand zone slash buying zone. Any words you can use? So when next time this zone is touched, market will go up. Demand zone or buying zone. Now, just opposite to this is supply zone. Sellers dominating. Sellers and buyers are equal. Sellers dominating. That is called supply zone. Because sellers dominating overall, right? Supply zone. This is traditionally people will be using like this. Supply zone or selling zone. Okay, now there is a other demand zones also there. So very simple. Let's go here. Market is going down. Market create the range. Market go up. So here, who is dominating? From here to here, sellers dominating. Whereas from here to here, buyers dominating. Also, buyers broke the sellers. Breakup structure happened. Buyers broke the sellers. So originally, sellers are minimum, buyers are maximum. Buyers are dominating here. So this is a demand zone. This is the demand zone or a buying zone. I would say. Okay, demand zone. Let me do one thing. I'll share this first. Then I'll delete that, then I'll come back. Now this is, without the words, without the jargons. You can use this also without any jargons. Let me delete this. Let me draw fresh. Okay, let me do this. Market is going down, going down, going down, going down, and market create range, and market is going up suddenly. So during this process, it broke the structure. POS happened. Okay, POS happened. So that will be your, because overall buyers are dominating. So demand zone, demand or buying zone. Guys, I want to tell you something. In the next session onwards, we are not going to use this. Okay, this is purely for your understanding. This second day session is for purely for understanding the foundations. We are not going to use any of these things. We are going to use most simplistic form of everything. Okay, but this is for knowledge and foundation thing. Up movement, range, down movement. So overall, the breakout structure happened to the downside. BOS happened to the downside, and this is going to be a supply zone, or I can just selling zone. So these are the 4 patterns. All supply and demand traders will keep on looking for and look for a trade from the market, but most of the times this pattern works, and many times it fails also. When it is fails, we'll be doing a different approach. We'll discuss that also. But in my personal opinion, no, you don't need this for trading smart money strategies. You don't need this. If you are trading like a stock market, maybe you can try this, because stock market is, we need to understand one important thing here is not only price but volume is also important. Volume is also important. Supply and demands are based on volumes. What do you mean by volume? Quantity. How much you are buying, at which price you are buying. There is a two difference. 100 rupees, how many stocks you are buying? Okay, 100 rupees you are buying, but how many stocks? 100 rupees you are selling, how many stocks? So volume is how many means volume, that is count, and which price you are buying. So price and volume combined together, supply and demand is supply and demand purely based on price and volume. Price and volume. I think 1 year before, not 1 year, I'm not sure. I think 7 months before, tomato prices increased, right? All over the India, 1 kilo tomato become 200 rupees, right? Why price increase? Because of the shortage of production, shortage of the volume. Volume is very, very small. Quantity produced is very small. So that's the reason price increased. Okay, so most of the supply and demand price movement are purely based on the volume. I mean, volume also play roles. So supply and demand strategies focusing volume more. So better if you are trading stock market, you can apply whatever we learned today, right? That you can apply. But if you are going to trade futures, and if you are going to trade what do you call currency market, especially forex market, volume doesn't really matter in the forex market. Even for the crypto market also, volume doesn't matter. But crypto, arguably it's a digital commodity, right? So it still have the volume, but I won't say that it's a real volume. It's a kind of a tick volume. So, but forex market, it's completely a tick volume. There is no real volume. What do you mean by volume here? Guys, if I'm buying a pencil, so I'm paying 5 rupee, I'm getting this pencil. So one pencil, 5 rupee. So one volume I bought. I'm buying this physical product. If you buy a share, it will be added into your demat account, dematerialized account, right? So when you buy one share, even one share, you are buying the rights of that particular company. You are the owner of that company. That is a identification. That is a, what do you call, the share certificate is the proof that you are the owner of the company. So you are buying the ownership of the company. For that, you are paying the money. So you are buying one share means one volume you are buying. Whereas in commodity market or even a forex market, especially when you buy 1 euro USD, you are not owner of the euro USD, right? You are buying one mini lot of euro USD, 10,000 units of euro USD. You are not become a owner of the euro USD. For euro USD, the respective their country's central bank is owner. For India, for Indian rupees, Reserve Bank of India is the owner, right? They are the owner. They are the one who is printing the currencies, and you are not buying the physical currencies, or even though you are not buying the what do you call the dematerialized digital asset also. Okay, so here you are just quoting. Okay, I'm expecting that market will go up, so I'm betting market will go up. I'm buying. I'm spending the money. You are not buying the ownership of the currency. So there is no real volume in the forex market. No real volume. Uh, Only euro or only for that matter Indian rupees. Only Reserve Bank of India know how much currency they are printed, how much currency is circulating all around the world. Only they will know. Only they know the real volume of the Indian rupees. Similarly, Federal Reserve of America, only they know the real volume of what do you call the US dollar. So every country have their reserve bank. Only they know the real volume. We don't know the real volume. We know only the tick volume. What do you mean by tick volume? I am buying at 100 rupees. You are buying at 100 rupees, and one person is selling at 100 rupees. So my buy is one volume, your buy is one volume, and his sell is one volume. So at particular 1 minute time frame, particular at 7 o'clock, 3 volume traded. It's a tick volume. I'm not buying the ownership of the currency. You are selling, you are not selling the ownership of the currency. You are just quoting that market will go up, so I'm gonna buy. Or I'm selling because market gonna go down, I'm selling. So it is like a digital exchanges, like we are just quoting or betting the up and down movements. According to that, market is also reacting. Okay, so there is no real volume. So when there is no volume, supply and demand may not work 100% all the time with the forex market, but with stock market, wherever volume is there, you can always try that method. It works. But also, then why we discuss so far? Because it's a foundation, it's a backbone for any strategy so far, whatever you know. Because price, discount level, premium level, optimum price, all those things are common. That is common for any market. So irrespective of the volume, it works. But wherever volume there, it works better way. Okay, so if you are trading stock market, if you look for investing in the stock market, you can apply supply and demand. But if you are looking for trading the forex market, you need to learn smart money strategy. That we will learn in the next session. We are officially going to learn the smart money strategy. But whatever you learn today, you can skip it if you want, or if you find it's more informative, if you find that you did not learn this anywhere, then you can learn, because knowledge is really important, especially the discount level, premium level, and middle price. That is really really important. That is a key takeaway. You can take it from here. And also, range market, finding the range market is very simple. Three candles you need. Just three candle you need. Okay, just three candle, parallel candle is more than enough. And same level you can buy several times, same level you can sell several times also. Many people used to say that if you are marking range market like this, and the market is touching first time, going up, second time when it has come, you can still buy. First time you are buying, no, second time you can buy, third time it is coming, you can buy, fourth time also you can buy. There is no limit here. As many as time it is touching the level, you can buy. Anybody says that one demand zone work for 2 times, 3 times, it is not. It works multiple time. But every time it is touch the demand zone or supply zone, you need to look for the confirmation. Based on that confirmation only, you need to buy or you need to sell, not blindly. If you are going to trade blindly, then I would say two touch, not more than two touch. Okay, first time it is touching here, buy. Second time it touch, you can take on a risky buy. Third time, don't buy, because you are blindly trading without any confirmation. Okay, so with confirmation, you can definitely trade multiple times also, n number of times. As long as it's give the confirmation, you can take a trade. All right. So in this session, you can take it or you can leave it, but the now whatever I have told you guys, that is going to carry forward in coming days also. But strategy part, you don't need to follow this. Range, market, touch, buy, you don't need to follow this, because once we learned the advanced strategies, then you come back here, maybe you can apply it. Okay, as of now it's not going to help you, it's very generic. But after learning the advanced things, then it will be helpful. Okay, but understand one thing: swing points, range, markets, both are powerful. Both levels, market will be reacting. So we may not use it right now, but after learning the advanced strategies, we will be using. But learning it, not learning it's not a matter, because next session we are going to learn WBW strategy. That is very powerful. That is more important than any other strategy. All right. So hopefully you got some insights today. Let me see. I have not seen your chat boxes. All right. So if you have any questions, you can now ask. I do checked your homeworks. Some of you guys are did the homeworks. Some of you guys said send on the same day. I have seen that. But the thing here is, whatever you guys marked, it's absolutely perfect. So you can see here, stopped, gone above, fell down, stopped, and you can include this also, but it is a range market. That's okay. So stopped. Now it is broken. Now the thing here is, no, when you see the range market, when you see market goes like this, range is broken, right? You have to be really careful, because range breaks sometimes is not a break of structure. Okay, if you see range market and if you see a break up or breakdown, range breaks are very dangerous, very dangerous to trade. So how do we do that? Now you can see here, down, there's a range down. I have a break here, I have a break here, I do have a break here. I would always consider this break. I don't consider this, I don't consider this as a break, because it's part of the range. Why? There is a reason for that. I'll explain that in the coming sessions. Not right now, I may not able to explain that, because it's a long story. Short way I cannot explain. Okay, so range breaks, don't consider that as a break of structure. That is the one reason supply and demand traders are fails. If you see the supply and demand strategy here, okay, let's say here, this one, specifically this two often fails. This is works. Why? Because you got a break of structure here, break of structure, range market, break of structure, range market. But whereas here, only the range break is there, no break of structure. So like up, down, up. So here only the range break is there, whereas in these patterns, down, range, up, you have a range break as well as swing break. But swing breaks are important. Okay, why many times this pattern fails, this two patterns fails? Reason for that is it don't have a swing break. So range breaks are not break of structure. Understand? uh, Here you can see, this is the perfect example. You can see here there is a range here. range here. There's a range break happen here. I don't consider this is a break. I want to see the previous swing break. Swing break, this is the perfect one. Okay, I want to see that. So here you have a range market, range break. No, don't take it. Swing break, yes, take it. Swing breaks are powerful. Swing break, take it. Range break, don't take it. Because it's part of the range, right? Range break, don't take it. Why? Because the concept called liquidity concept. We will discuss that in the next session. Okay, next to the next session. Clear everything. Thank you, sir. Thank you. I know that a lot of beginners I know beginners will be having confusions. I understand that. Totally agree with you guys. But my suggestion, only suggestion to the beginners, sir, I don't know anything, sir. If you are like that, no, don't worry. Don't worry, because in the day one you will not learn. You cannot learn everything. Everything. It is like you are. We are drinking alcohol here. Okay, so you are a beginner to drink. You are just a beginner, right? You are a fresher. So I'm giving you the one bottle alcohol to drink. so so we won't suggest that, right? So you are new to the drinking. If you are drinking one full bottle, then you will be like passed out easily. So um, I understand that whatever we learned so far, no, that is also kind of like drinking one bottle alcohol for a beginners. That is agreed. But calm down, slowly watch this video. I mean, take some time, watch this video repeatedly. I have shared you the basics also. Two basics video yesterday I have shared. One is I made for the candlesticks. Another one is I made for the, and another one is like a, it's a it's a foundation to the forex market. So I suggest you to go through the videos, go slowly, no urgent, no rush, no push, go very slowly, especially for the beginners. I'm saying, don't think like that. I don't know anything. These guys are doing assignments. I cannot do it because these guys are experienced trader. I don't know anything. I'm beginner. I cannot do this. I cannot do. No, no. Don't think like that. You can go very slowly, because understand one thing. This is the lifetime mentorship. Means skill development. It will take lifetime. It will not grow overnight. It will take some time, right? So for that, you need to allow yourself that, okay, we are beginners, so we will eventually learn, because everybody started from the beginning, right? From the scratch only. Somewhere they would have learned. Somewhere they would have learned. They would have done mistakes. They would have done different things. They would have made to the point. Even myself also. So failures do happen, and you will not understand anything. That will also happen. But go slowly. Just go slowly. Go consistently also. Every day, go through it, go through it slowly. Watch some 10 minutes, 5 minutes, 10 minutes, something like that. You will slowly build up that confidence. Slowly you'll be learning. Okay, but don't worry. Even if you don't understand anything today, don't worry. Next session going to be really easy to understand. Very simple. Anyone can easily understand that, and that is very powerful also. Okay, that is more than enough. That's more than enough. Whatever you're going to learn in the next session, that strategy is more than enough. You can follow that one strategy for a next 10 years also, because it's been there for almost for 30, 40, 70, more than 70, 80 years. Okay, so that is the kind of strategy we are going to learn, and we are going to learn in a very simplistic way. But the explanation I'll be giving for that might overwhelming, that might give you the confusions. But in the next session, I'm going to purely explain the strategy and how you need to apply, where you need to buy, where you need to sell. And next to the next session, I'm going to explain that, what is the logic behind that. Okay, so next session, if you are attending, even if you're a beginner, you can easily follow it. Don't worry about that. All right, guys, don't worry about that. We will not simply leave it. And I forgot to tell you guys, I think I last session I got told you guys, tomorrow we'll be having a live trading session, 5 o'clock. There is a problem. I'm not sure we'll be conducting live tomorrow, because As I told you guys, there's an important commitment uh, with other business. I may not able to conduct tomorrow, but don't worry. Definitely we'll be doing one live trading session in this week. It may be in the, if not in the evening, at least it will be in the morning. Otherwise it will be like in the next week. For you guys, specifically for you guys, uh, after the third session, this is today's second session, right? After the third session, if you are attending live, that would be like best, to be frank. That's the reason every third session only I'll share you the Telegram link to join the people, to join the Telegram community. I don't share even well in advance. The reason is, if you join right now in the Telegram, you will get confused with a lot of discussions going on in the group. Also, if you join the live before the third session, before the WBW strategy, then also it will be like bit difficult. So better after the third session, you can join the live session. If tomorrow, if I conduct the live session, I may not allow you to participate. You don't need to participate. You should not participate. Why? Because you don't want to get confused. But I'm not sure tomorrow I will be conducting. If I conduct, I'm not going to entertain you guys. Okay, I'm sorry. I'm telling you this because without go through that advanced strategy. I mean, the main strategy. If you are coming to the live, there's no point. So tomorrow, if I conduct live session, I will not entertain you. Maybe from the next live session, I will entertain you. If I'm not conducting live, then Friday will be having live session. In that, I will definitely add you guys, because Thursday we'll be having a third session, right? Thursday we'll be learning the strategy. Then it will be easy for you to follow also. So if tomorrow live conducted, I will not allow especially this June batch. But previous batch students will be there. If I'm not conducting, Friday will be having live session. In Friday session, you can participate, because by that time you would have learned that strategy. Okay. So also understand one thing. Even if we skip one or two live sessions because of my health condition, or maybe like because of other stuffs, or because of other things, because you may not able to participate sometime, don't worry about that, because we will be doing this for a lifelong we are going to do. There is no change about that. Whether I'm there in the TFU, or I'm with them, or without them, right? Whatever the case, the live session will be going on. It will be going on for a lifelong. So maybe 1 or 2 weeks, maybe in between we'll be missing up the sessions, but it will be there. It will be there. Don't worry about that. Okay, because I want every one of you to participate. First session you need to be observed. Second session onwards, you need to participate. What do you mean by participation? I'll give you the address of the, what do you call, any desk address. That detail you need to put in your computer, and you can take over my software from your computer, and you can sit in your home. You can trade in my account, in our account. It's not my account, it's our account. Nowadays it's our account only. In our account you are going to trade. In your account, you can say your account, but money is my money. You are going to trade. So that is really important for every beginners, but every beginners should practice in the live market, in front of the mentor, in front of the other peoples. Only then it will be giving them, what do you call, the pressure, right? That pressure you need to enjoy. You need to enjoy. You need to face the pressure, because I'll be there. I'll be watching you, how you are analyzing the charts, how you are taking buy and sell entry, and other people is also watching you. So that will give some kind of, in examination center, if you're writing the exam paper, in the paper you are writing, if supervisor sits in your seat, or stand near to your seat watching your paper, you will get some shiverness, right? So that kind of feeling you have to experience in the market. That is important. That will make us confident, more confident trader. That will also kill our ego, slowly kill our ego, as well as the inferiority complex. So that is also important. So I will be allow you to trade in our account. So don't worry about that loss and profit. Just chod do, like, because it's not your money, right? It's not your money. It's, you have not paid for that account. It's my money only. It's I have paid for that account, but I want you to participate. Every one of you to participate. So we'll take time. We'll take some time. If not tomorrow, maybe in the next live session, you can participate. You can like involve. Okay. So don't worry about that. We'll be doing it lifelong, but your participation is more important and your involvement is more important. Okay. All right. Any question, guys? Anyone have any doubts, any questions? You can ask. Even if you don't want to ask right now, you can send me personal message in the WhatsApp. I hope everyone got my number. Whatever the screenshot I have shared, that is my number. Contact me personally. If you don't want to speak in front of other people, contact me personally. Okay. And next session is Thursday, I think. Thursday evening. We will. I will definitely share you the Telegram link. I will tell our admin Giridhar to share the Telegram link. You can participate. Join the Telegram also. Okay. Have some patience. All right. And the one more thing, the link which I have shared, 2 videos I have shared, no, that is our YouTube channel, and in that there are psychology videos also available. If you have time, you can go through it. You don't need to subscribe, you don't need to like, no need to do that, but you can go through the contents because uh, it's been really long time we have not conducted any psychology session, but there are psychology session videos also available. You can go through it. That will give you some idea how you can improve your psychology, and how you can like have that confidence while you are trading and all those stuffs that we have discussed many times in the last year, but very recently we have not done anything. So if possible, we will do it. Maybe the next month we'll do it, the psychology session, but you can go through it. Yeah. Sir, you can allow us to watch the watch the trading session, live trading session. You are saying no, that is after third session. Okay, after third day, day 3. Once you guys learned WBW strategy, you are good to join live trading session. Otherwise, no, it is pointless. It is useless. That is my opinion. That's the reason. Tomorrow, if I conduct live session, if you participate, you may not able to follow me on certain areas, so that might uh, give you the confusion. That's the reason I'm telling. Okay. This demat account is no need to open demat account. No need to open any account right now. Okay. Don't spend your money. Don't open the account right now. You just let us complete the boot camp. Then I'll give you the instructions what you need to do, and you follow that instructions. Then you open the account. Then you open account with the broker or maybe like the funding platforms. Okay, don't open your, because if you open right now, no, your hands will not be like, you will not be idle. You'll be started to test, right? You wanted to like, I opened account, I paid money, I deposited money, I want to do something. So he'll be out of curiosity or like with the excitement, you will jump into the market, you'll be making losses, right? So stop it. So because I'm in my, see guys, I want to tell you is, I will be testing you, right? I'll be testing your patience. Many people, that's why in our community only 600 people are there. We have trained more than 3000 students almost last 3 to 4 years. But why 3000 students are not there in our Telegram community? Because many people vanished, because they cannot able to sustain. They cannot have, they don't have patience. um, Definitely they don't know what to do. They cannot follow the rules. Okay, so those who those who tested the time, right? Those who had patience, they are still sticking with us and still part of our community. But that is important, very very important. Whatever the practicing methods, whatever the techniques I'm going to give you, that is going to test your patience. That will be definitely test your patience. If you succeed, you will be, I mean, succeed in those tests, you will be definitely at a good level, at profitable level. But many people will vanish. Many people will vanish. It is very difficult. I mean, not strategy. I'm talking about the practicing, back testing, forward testing. We'll say that it is very very difficult. I don't want to do that. I'll jump into the next course, next mentor. They'll go. So that happens. But but you have to take the test because it's a business. It's a business. Now I'm facing lot of why I can't able to conduct a live session tomorrow, because of I'm started the business. I couldn't able to manage that, to be frank. It's very difficult. Started the export business, I made a website and everything, all those stuff. I'm contacting many customers every day. I'm contacting many customers, many I'm planning to travel to Singapore I end of this month. uh, so it's very difficult. It testing my patience. Or why should you do this? You can stick with the trading. It's coming because trading is very comfortable. I'm comfortable with the trading because all those 12 years. But also, it's my dream to do the business. From the last 12 years, I have been trying to do this business also. Export, import business, export business. So, but it is testing my patience, testing my many things. I'm really frustrated, to be frank. Really, really frustrated to commence this business. I started, but couldn't able to progress further. But it's going on. I know that it will be taking some time. It will be testing me. I should not lose my composure. So, same thing here in the trading. For some of you guys, complete beginners, you may feel that it's overwhelming, too much of data, too much of knowledge, too much of understanding, confusion. It will be there when you start at very first time. It will be there, but if you sustain no consistently, if you sustain no, you will definitely do it. I do have that belief. That's the reason I started this. I started the new business, and hopefully that will be take off very good. Okay, so yeah, if you feel confused, if you feel like that, I don't know anything, don't worry. We are there. I'll be there. Our community will be there. We will be helping you to grow as a trader, but you should you should follow our guidance. You should ready to surrender yourself to the strategy, surrender yourself to the market at least 2 hours in a day. That is important. Okay. Stop loss should be the bottom. Stop loss always should be the bottom. Whether you are trading from the 100% or 50%, stop loss should always in the bottom. I shared that picture. Here you can see stop loss should be always below the range. I mean, at range or below or at exactly at this level or just below the stop loss. Whether you are entering here or entering here, that doesn't really matter. Stop loss should be here. It's still big stop loss. That's the reason we should never trade blindly. We should look for the confirmation. After that only we'll be trading. Okay. When you trade after the confirmation, no, your stop loss will be very, very, very small. Mark my word, guys. If you trade with the direct method, 50% entry or 100% entry, your stop loss will be always bigger. But when you trade with the confirmation, no, your stop loss will be 50 points, 25 points, 70 points, sometimes 100 points, maximum 100 points. Very, very tiny stop loss. You can definitely trade that method, but again, that will also test your patience. Okay. So all need some sacrifices, right? Okay. So today I'm not going to give you anything because I don't think so. Practicing the ranging market, it's not necessary. But if you want, you can do it. But always practice the breakup structure. Breakup structure is really important because next session I'll be giving you the assignment and everything. Next session going to be a really really great. Don't miss next session. Okay, next session is very important for this entire bootcamp. Attend that, and after that, fifth session also important. Next session is the third session, fourth and fifth session also very 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 important. So third session and fifth session, don't miss it. Okay. All right, guys. I think I'll take you leave. Thank you so much for participating today. We'll meet you guys in the Thursday evening, if possible. I'm not gonna add you guys tomorrow. If I'm conducting the session, I will not add you guys. If I'm not conducting session tomorrow, then Friday session I will add you guys in the live session. Okay, Friday session you can attend, but probably Friday morning will be there in the live session. We may not have evening. Not sure. I'll confirm you guys Friday evening or Friday morning. I'll confirm you guys on Thursday evening. Okay, thank you so much. We'll meet you guys. Now, assignment is correct or wrong? That's the question you are asking. Now, the thing here is, if it is a wrong, that's okay, no problem. If it is a right, that also no problem. The point here is, for a first 1 month, whatever you do, whether it is right, wrong, that doesn't really matter. Because let me tell you guys something. When we learn anything at first moment, very, I mean, today you are going to learn the the new thing. Let's say you are going to learn new thing today. You will definitely do mistakes. That's okay. You'll do a lot of mistakes. That's okay. For a first 1 month, whatever you want to do, it's wrong, right? That doesn't really matter. The matter here is you need to do. That is matter. I'm talking from the perspective of psychology, not from the perspective of trading. Whether you do correct, wrong, that doesn't really matter. If I say you are doing wrong here, this is wrong. Let's say if I'm saying this is wrong, then what you will do? No, immediately you will get your psychology get, okay, I'm doing something wrong. I'm doing something wrong. Okay, maybe I'm not fit for doing this. You will start at your psychology will start to talk. Your mind will start to talk. It will talk negative about yourself, and you will stop doing it. You'll stop doing it. This is proven, guys. Whatever I'm not joking. I'm not joking. I'm not just what do you call it, telling you the story. It is proven. Whatever you do know, if you expect something, you are definitely going to fail. If you expect something, you will definitely fail. Let's say, sir, I marked today break-off structure. Sir, can you please tell me it is right or wrong? If you why that expectation coming? Because you want someone to judge you. Why that is coming? Because you are not confident on whatever you are doing. So that you want someone to judge you. That somebody appreciate you, no? Oh, super. Everything is perfect. Then your ego will increase and you will say that, oh, I'm good at break-off structure, marking break-off structure. If somebody depreciate, they say whatever you did know it's wrong, then you will feel inferior. You'll feel inferior and you will not do that. So the point here is, whether it is right or wrong, that doesn't really matter. You just do it. Do it. Even if you do wrongly, at some point of time, you will do rightly. You will do rightly. Just do it. Your job is just do it. Don't expect somebody to dictate you, somebody to like correct you. Just do it. Just do it. Okay, for 1 month. Next month onwards, whatever mistakes you are doing now, we will figure out. Okay, so this is if I give you the commands, you will stop it. You will stop. If I appreciate you, then also you'll stop it. Whatever I'm marking, no, it is correct. Sir said correct. Whatever I'm marking, no, correct. So I'm good at this. You will stop it. If I blame you, you will again also, whatever I mark, no, sir is always criticizing me. It is like it is not working. I'm not marking properly, so I have to leave it. That's why I'm not responded. Okay, so it's psychology. Okay, so I will not dictate you guys, I will not correct you guys until for the next 1 month. Next 1 month, after 1 month, you are going to come to the live session, right? You're going to trade in the live market. In the live market, I will correct you guys. Okay, don't worry. Yes. Yes. Practice. Great. That's why this bootcamp is completely different than others bootcamp. Whatever we are discussing here is purely psychology, because I'm a life coach. I provide psychology counseling. I know how psychology works. I mean, I'm not expert, but I do know based on my experience, because I have been doing this psychological practice more than like from 2016-17. So that is the reason I'm standing in front of you guys. That's the reason I'm standing in front of you guys. I'm teaching you these things. It's all because of I tuned my brain. uh, I tuned my brain for the success and other stuffs. So I'll give you that here and there. I'll give you the techniques and everything. Those who are wise enough, they can follow that. They can make success. Those who are not wise enough, they will realize after 5 years. Maybe after 3 years, 5 years, they'll realize that, oh, that's why it's working. That's why it's not working. Okay, great guys, great. Thank you so much. We'll meet you guys in the next session. Um, so I'll take you leave. Bye everyone. Have a great day. Good night. So I'm just stopping the screen sharing. We'll meet you guys in the next Thursday evening. Okay. Bye. Good night. So I'm gonna end the meeting to everyone. Bye. Take care. Good night. Bye.